Bob Oler.
And I am Tom Langner. And this is another spine-tingling episode of Rob and Tom Making Sense
of life insurance.
And again, Rob and Tom with American Senior Benefits in lovely Scranton, Pennsylvania. And tell them, Rob, what agency are we with?
We are with Smith Insurance Services, and our contact information is voila.
Shazam.
So we'll also give that to you at the end, so don't have to worry about it. But get a pencil and write down any questions you may have for the comments and throw them somewhere. So, this is a brief overview of what we're going to be discussing today. So, life insurance is the topic this week again.
We have a quick history. What is life insurance? What are the different types of life insurance? What are the uses of life insurance, and what are some of the misconceptions that people have about life insurance? We're going to go through those in a little bit of depth here going forward.
And we're going to make sense of it all.
Darn skippy.
Hopefully.
Let's move along.
All right, a quick history, Tommy.
Quick history is the first life insurance policies are said to have been originated in the 18th century in London, England. This was after a few decades because the first life tables, in other words, the first actuarial tables, were derived in 1693, but it took a few more decades for the actual machinery of the actual policies to be able to be developed and to be sold to the general public in England at that time. And sale of life insurance in the United States is generally regarded to have begun in the 1760s.
Good stuff.
Yeah.
Alrighty. So,
what do we got here, Rob?
This is what is life insurance? Commonly accepted definition is as follows. A contract between the insurance policy holder and the insurer or usher, where the insurer promises to pay a designated beneficiary a sum of money, the benefit, in exchange for a premium upon the death of an insured person, often the policyholder.
And it's important to make that the distinction of what an actual insurance policy is, because there are many that look at it as a general terminology that seems so nebulous that sometimes it's good to get it down into actually specific words so that you have a better idea as to what you're actually looking at. Now, on to the next slide, and we'll go, what are the different types of life insurance? And those are, in a basic sense, there's two different forms. There's term insurance and permanent life insurance. Now, what's the difference? Term life insurance, again, is designed to provide coverage for a specific period of time on the insured, which means that it doesn't necessarily last for the length of the insured's life, but for a specific time, whether it be 5 or 10 years or more. There's generally no cash value within the policy because it's almost like we always liken it to car insurance. In other words, you pay on your car insurance for the amount of years that you choose to drive, but when you cancel your car insurance, when you decide no longer to drive, they're not sending you a check at the end saying thanks for the business. It's just strictly stripped out and generally in the least expensive form of life insurance because you're only doing a certain level of time in there. And again, there's various term limits available. Rob, take it away. What do we got next?
The next is permanent life insurance, either whole life or universal life.
Which is the oldest form?
I would say it's whole life.
I would think you're correct.
And I know I'm correct. Now, whole life and universal life designed to provide coverage for the entire life of the insured. And cash value is accrued for the owner of the policy, and there are many and varied differences between whole life and universal life.
And again, we can get into a specific discussion on each one of these products on a different episode, but we wanted to give you an overall version of what is available out there in the market right now, because there's a lot of specific variations of each one of these, whether it be term and permanent and whole life and universal, that we can go into, but they need some time and more than we're going to devote just in an overall talk about life insurance.
Sure. All right, so what are the uses for life insurance? Now, seems kind of straightforward that everybody knows, but there are some different areas that some people may not be aware of.
And again, these are not the entire list in total. This is just an overview of what the what people use life insurance for the most part for. But what's the first one you got there, Rob?
All right, income replacement for the insured. What do we mean by that? Well, there's usually a multiplier that people kind of equate to this area, or we call it spousal support. So how many times your annual salary are you going to multiply it to equate your life insurance to? 3, 5, it's up to you. It's your
Yeah, what you feel is most appropriate. I mean, if you're no longer here, and you have a spouse that either works or does not work, at least in terms of when I say work, go out and get a W-2 at the end of the year. We're talking about economic value to a family, and most people use the metric of like Rob said, 3 to 5 times annual earnings as a basis.
Yeah, just the minimum.
What do you got next there?
All right, final expense payments. Now, I feel that is the most common thought process when people think life insurance. Just the final expenses, the funeral, the cost associated from casket to
the reception afterwards, and
to actually, they actually charge you at the cemetery for breaking ground.
The internment,
yeah. So everybody, unfortunately, there's expenses for these things. We always say, when we're talking to a client, where everybody at a time of loss of a loved one, everybody's coming with bills, we're the only ones coming with a check. Something to think about.
Yeah.
What's next?
Well, we got inheritance and estate tax payments, and what that essentially means is there are taxes involved with dying. Can you believe that? And they're sometimes referred to as death taxes. Now, inheritance taxes are state taxes. In this case, we're in Scranton, Pennsylvania, so inheritance taxes in this state are levied by the state of Pennsylvania. And everybody knows why there's inheritance taxes. Well, there's a federal inheritance tax, and it's called estate taxes. And those are levied on people that generally are of higher net worth. And boy, if you run into estate taxes, that means that you've got some money, and those estate taxes are going to be severe, and in some cases can be up to 50% of the what people associate as the net worth for that particular person. So sometimes you use estate taxes in order to provide a fund to pay those taxes, and it's done quite a bit, and it can come into play even with inheritance taxes, because in the state of Pennsylvania especially, we have a pretty prohibitive probate court, and probate court costs can be in some cases up to 10 to 15% of the value of the estate, whether or not you're high net worth or not. So what do we got next?
All right, business partnership buyout at death of one partner. Now, what does that mean? Well, say you have a restaurant and you own 50% of that restaurant, and someone else, like say me and Tom, own the other half. Well, I pass away. Well, now Tom's burden is to take on the financial responsibility of the business 100%. Or the family, my family, would then become a partnership with Tom because they inherit my asset of the business.
And it may not be our desire to have surviving members of our families assume,
or they may not even want to join the restaurant business at all.
So why force them into it? So what Rob is alluding to is providing a fund so that if that were to take place, that there's an immediate cash fund available in order to facilitate the buyout of the other partner in that business.
Mm-hmm.
It's real simple. And the last one is legacy gifting to family educational institutions and charities. In other words, you may not be and even if you are, there's a lot of people that use life insurance in order to provide a large benefit to maybe their college or their high school or a charity, so that they can actually leave us much more sizable gift than they can just by putting money aside on their own. It's essentially just trying to create a legacy, and you see it's not quite as often used as some other tools, but it's a powerful tool if you want to do that.
I will have to say this is my favorite. Sorry, nope, we'll just keep going. Sorry about that. Technical Geez. But this is my favorite use, I would have to say, of life insurance because all the other ones kind of have a sad or down feel to them. But when you're talking legacy gift and to family or institutional charity churches, everybody wants to give more to their cause, and this is the cheapest way to get the most bang for the buck. I love that particular.
It's the most efficient way.
Yeah, and people don't think that way. They think, oh, I want to give more to my church or more to the Humane Society. Well, you can do this as a legacy gift. Something to think about. I can go on and on and on, but I'm not.
And again, as I mentioned before, this is just a partial list of the uses, but these are, in our opinion, to be the most often used, and just wanted to have you take a look at it.
Yep. All right, the last one are some life insurance misconceptions. First one is, Tom?
It's too darn pricey. And most of the studies show that people's conception of life insurance premiums for what they desire to actually purchase is usually overstated in their minds by over 80%. So what that means is that it's maybe not as pricey as you're giving it credit for being, and there's ways of actually developing a life insurance program or plan that can be very affordable if you just give it a shot and actually take a look at it. What's up next?
I don't need it. I'm either too young, I'm single, I have no children, I feel no need. Well, as we all know, things change in our lives as we go on throughout this wonderful existence of ours. So the young one, that changes every minute, every day. Okay, you get older and older and older. And the younger you are, the less pricey it is.
Absolutely. Great point.
Yeah, something to think about if you're planning for your future. If you're not married, well, who's not to say that you're not going to meet someone moving forward? Mm-hmm. You may have children after you get married. Who knows what the future holds? We do not. We always talk about the crystal ball that we do not own. We don't know what's going to happen tomorrow. We don't know what's going to happen anytime in the future. Also, we know what's going on right now, and Tom is going to do the next one. See,
I often, as far as the second one too, I often state to prospective clients, don't make the older version of you want to come back and kick the tail out of the younger version for not doing some basic planning like life insurance. But the next one is, I'm too sick to qualify. Well, that's often a misconception as well, because there are programs that allow for quite an amount of ailments that you might be suffering from and still qualify for some form of coverage, and it's still a lot more efficient than having nothing.
Absolutely.
We can't guarantee coverage, but we can certainly do our darn levelest to get you something.
Next one is, I have enough savings or investments. Well, if you're going to pay dollar for dollar for your funeral costs, God bless you. But if there's ways that you could offset some of the cost by getting some life insurance at a prorated amount, only makes sense.
I've never seen an instance where somebody had money put away where they could not get better efficiency and leverage off their money by applying some form of life insurance to it. It's an immediate form of increasing your money that you're going to leave behind for whatever purpose you're going to leave it behind for.
And we don't talk about taxes, but there is something that goes into that area in regards to taxes and how much I have versus how much, life insurance payout.
Mm-hmm. Yeah, and not available for older people, I would beg to differ. Yes. Most coverages I've seen can go up to even the age of 85.
Yeah.
And not that there's people that are older than that don't have some need, but we're talking about quite an age spread that you have availability for purchasing some form of coverage, if that's what you want to do.
Here's one that we hear quite often. I have it through my employer. Well, again, employment changes, jobs change. Again, our job is tough because we end up talking about the negative. What happens if you become disabled and now you cannot work and now you've just lost your benefits? Something to think about. So now, where you were able to qualify ahead of time, now you're disabled for whatever reason, you're taking medications that make you unqualified for life insurance.
And guess what, Rob?
What?
Is there an opportunity if you have your own policy and you become disabled to actually have the premiums paid for you?
I don't know, Tom, is there?
I think there is. And usually there's no policy that I don't know that doesn't have some form of what's called waiver of premium. It's very inexpensive, and if you do become disabled, the insurance company will pay your premiums, your
And
planned
keep
premiums.
the policy in force.
Yes. Yeah. And your planned premiums, and in some cases with the cash value life insurance, planned premiums are still accruing cash in there for you, and you're not even contributing to it at that point in time on a direct basis, but you're still getting cash value and the policy stays in force. Wonderful thing.
Go ahead. Last one.
I am a homemaker, and or I am not the breadwinner in my family. And to be quite frank, this goes back to what we were alluding to earlier. There's not a person on this earth that doesn't have some form of economic value, believe it or not. And if you're a homemaker, or if you're a stay-at-home mom or a stay-at-home dad, or you're not, you're for whatever reason you're not earning an income, you still have value. And to be honest with you, to replace a hardworking stay-at-home mom or dad is in this, most studies show, is in the several hundreds of thousands of dollars.
Absolutely.
So there's economic value there.
Absolutely.
So those are some misconceptions.
Just
Again,
some.
not a complete list.
Just want to throw them out there. So that pretty much makes sense of life insurance.
Yeah, and this is again where the questions and concerns come into play. If we didn't talk about some aspect of what you wanted to hear, that's what
I see it.
That's what the comments section is down below for. And this is again our contact information: American Senior Benefits, Smith Insurance Services, phone number, Rob and Tom. Please like and share this video on YouTube, and/or go to Facebook, American Senior Benefits, Scranton, Pennsylvania, and you will find that page, and you can like it there as well. But we thank you again.
Absolutely. And don't forget, if you do enjoy our episodes, we do have some others. We did Medicare
supplements, and retirement planning so far.
So enjoy those, but don't forget to subscribe. That way, when you do subscribe and we put on another episode of Making Sense, you will instantly get a notification of it. So that's important. So like, share, comment, and subscribe. We thank you very much for your time and watching.
And you have a great day.
See you later.